Hello guys, welcome to the Trading Parrot. Today is Saturday, and in the past week we have managed to do more than in the past 6 months. Take a seat and we'll have a look at what's going on at the moment. We'll see what we have accomplished in the monthly, in the weekly, and we'll also take a look at the 4-hour and daily time frame together with the CME closing price to see what's up for the weekend. We will have to adjust some of the patterns on the daily thanks to new developments this week. Pretty interesting stuff that we're gonna be discussing today. Guys, if you like this type of content, make sure that you are subscribed to the channel, hit the notification bell so you get notified every time I put out one of these videos. Can we get in this video to 300 likes? That is the main question. If you can help me with that, that would be awesome to continue growing in the channel. Guys, yesterday I put out the second video in Coin Bureau Trading. This is a collaboration that I'm doing with the official channel Coin Bureau. This is the video I put out. As you can see, is 31 minutes. It's packed with alpha information, the most comprehensive look into Bitcoin of what's going on at the moment. I suggest that if you want to go the extra mile and get fully informed, catch up if you haven't been able to watch the videos during this week, go ahead, subscribe the Coin Bureau Trading channel and check the latest video, this one in here. And if you are supporting really the channel, the Trading Parrot, it will really help me if you can also hit the like on that particular video and write down a comment. Thanks so much for all the comments that you put on the first video. That was amazing, guys. We really have a parrot army acting 24/7. Let's get into the content. Let's start with the CME price action. We usually do this on Saturdays and Fridays to understand what could be ahead of us. And it's been kind of the typical price action in the past 4 weeks that we see the price action going higher into the weekend, closing at a very high price on Friday. And each and every time we say the same. That is actually something great for the price because it means that at the very least during the weekend, whatever price action goes against us, if we take a pullback right in the middle of the weekend, that is great because that could form a CME gap like we saw in here. Going into the end of September, we have this pullback within the weekend on Sunday. We left it there. The rest of the week, we continue down. We put a low, a lower high, and another low, and then eventually we came back to close that gap. That is fantastic. So if we were to do something like that, I will be really excited to see that. What I wouldn't like to see over the weekend is that we start hitting 77k, 80k and really making all-time highs over the weekend, because that will mean that we will leave here some sort of depth in terms of closing that gap, not to mention that we already have quite a substantial depth in here from 54k to 54.5k. There's still a CME gap that is not closed. I'm not claiming that we have to close all CME gaps. There is one at 20k that hasn't been filled yet. No one knows if we will ever close it, but it's not nice to leave these gaps behind when you're on the way up, because you keep thinking and overthinking about them, all thanks to these gaps being closed more than 95% of the time, I will say. Just a finger in the air. I haven't counted them, by the way. Let's go into the 4-hour. Let's also observe the CME. I was gonna say the CPR actually, and you can see here that we have managed to touch the CPR, but in fact if we zoom in enough, you can see that we haven't really. There is just a gap of around $34, and we could argue that maybe in some other exchanges it has managed to touch that resistance, but in fact it hasn't. I couldn't find a single exchange where the price managed to get above 69k. On my phone though, I saw many notifications claiming that Bitcoin will have already broken 69k and above, but then when I look at the charts, I don't see any above 69k. And why is that so important? It is very important because the CPR model says that to continue the uptrend in the next month, in this case in November, we do need to at the very least touch once the first level of resistance of the CPR monthly. On September we couldn't manage to do that. At some point I even claimed that in some exchanges I saw the price crossing 66.775. In this case is $69,030, which is quite of a shame, but we could argue that we got a lot closer in October to hit that. We could also argue that if we continue putting bullish flags like we have done in here, 1, 2, 3, if this was also a bullish flag just targeting the immediate fair value gap right there, we could over the weekend hit that 69.1 and even continue further. Later in the video video, we're going to look into liquidation pools to understand if there is incentive here, how much incentive we form during the bull flag, and whether the liquidity in here is now possibly becoming heavier than the one at the top. We'll see into that. Looking at the 4-hour RSI, we spent the week pretty much looking at these levels here below the resistance. We talk about this breakout, we talk about it being very humble, then we talk about this one in here, saying that finally we made a proper breakout. One thing that I forgot to say, which I pretty much say in every video, I don't know why I didn't say it, but is that I prefer breakouts that happen after a long ride below the trend line. A breakout from here is a very high quality one. Of course, things have become really bullish for Bitcoin and the price couldn't wait any longer, and we had a very early breakout. That means that this breakout, it's better than the one that we have on the 18th of October, but that doesn't mean that it's better quality than some other ones that we have had in here and in there. We're also accumulating some bearish divergences on the 4-hour that is typical during a pump, but this time I'm starting to see the price rolling over in here. It's putting new highs, but every single time the movement is less impulsive. So there is some exhaustion in here, and we've spent already from Wednesday looking for a low, for a pullback, possibly hitting these fair value gaps in here or the order block, and we haven't done any of that. During the weekends, we tend to have low volume. I wouldn't expect a massive dump. That will be really unprecedented for weekend price action. Anything can happen, of course, but we are talking about less than 1% chances of seeing something like that over a weekend. I'm gonna later talk about the levels that I would like to see a pullback on Bitcoin, and I will consider that as something healthy. And don't get me wrong, we are also going to cover what is the incentive on the top, which remains quite heavy. We have in here two market ciphers, bearish divergences. These are sell signals, but we can see that during a pump we tend to accumulate many of them. You can see in here we have 1, 2, 3, 4, 5, 6, and then we came back down in here, and it only took one bullish to continue on the way up, and that's thanks to the uptrend. So as long as we have an uptrend, we're gonna see many more bearish divergences close to the top, but only one of them will play out, making them a little bit useless at this point in time in the market. You can see that only two bullish ones resume the move up. In here, only one bullish one. So in this area, I tend to pay more attention to the bullish ones rather than the bearish ones. And in the bear market, it's quite the opposite. I think it will be pretty healthy for the Bitcoin price action now to take a low during the weekend. I'm not talking a massive low. We could go to 65, and I will be pleased to see some sort of price action like that. Hopefully at that point we can either get a market cipher buy divergence, or we could see as well some of these negative funding rates coming in as well. All of those during an uptrend tend to help us identify reversal and continuation to the upside. Let's go to the daily time frame. I promised that I was gonna do some amendments. I think it's necessary. We have big news on the daily. We have broken the resistance formed by all the wicks on the daily time frame. We have closed a green candle above it for the first time since mid-March. That is impressive, but we haven't managed to get to the top of the range on the volume profile, neither to my target of 72 RSI, which came from the channel that I'm just gonna show you in 1 minute. What we need to do in here is we had this ascending wedge and we place it like this. We talk about this breakdown, but since it didn't do the breakdown, we're gonna have to take this point, connect it in here, and now replace the support line to make sure that it's touching both extremes. This is the way to do it at the moment, and this adjustment takes in consideration that we have put a low in here and we bounce again. Not just that, but now it makes the 72 RSI target within the constraints of the wedge. We can get into that remaining inside the wedge, which means that thanks to this new price action, it becomes a lot more feasible to get inside and touch that number. Before, we had this place like this, and we had to produce a bullish breakout above the ascending wedge, which is a bearish structure and is very low likely to see that sort of price action. So allow me to adjust it like this, and let's see if we can get now into that 72 RSI in the upcoming days. That 72 comes from the top of this channel on the RSI. We can see the RSI curving down in here, losing momentum momentum as it approaches the resistance. This is not something that hasn't been seen. We have done the same the previous time. We took that pullback that we still don't get on the 25th of September. We haven't had anything decent like a move of RSI like this, similar to that one. And after that one, we could trap a lot of shorts. It's not guaranteed. We will have to see that on Trading Different taking place live. Thanks to that platform, I can see it. And if they did that and the liquidity was heavier at the top, we could do another attempt and hit that 72. Notice that at this point it might become 73. So everything is dynamic in trading and we might need to be adjusting things as we go on. People are asking me, how will I see if we were to see a rejection from here, a pullback back into 65, because that technically puts us back inside the range. And I think the answer is timing. If we come back inside the range and we just spend one day and within the same day we leave a wick of the candle inside the range and then back above it, that will be extremely bullish. Something mildly bullish will be to spend a couple of days but still very close to the resistance, meaning that instead of seeing a rejection with a big ugly red candle with a wick to the upside, seeing some sort of sideways there, passing the message to the shorts that we are not done. That will be awesome as well. An ugly rejection like this, obviously taking us back down with a big massive red candle engulfing or anything of that sort, will scare a lot of longs, possibly causing them to close their positions. And remember that at the moment this movement is mostly driven by CVD futures. We can see it in this chart, and you can see it as well that since this candle on the 14th of October we have had 1, 2, 3, 4, 5 days of selling from spot. This is aggregated from all exchanges. One thing to note is that on the open interest we have done something that we haven't done in this whole range in here, which is to penetrate the top and get above the 21 billion mark with a closing candle above it. You can see in here each and every time we did 3 attempts and we saw a rejection. Right now we see 3 attempts and a close above it. Today we stay at 21.3 billion. Many people are claiming that because open interest is so high we have to correct heavy 10k, and I don't think that is the case. It is possible, it is a possibility, but if you look and you study how open interest really works in a bull market and you understand the fundamentals, you're gonna see that we have channels of open interest and the price action goes sideways during those channels, and eventually you get to very high levels of open interest. You see a flash, that is absolutely possible, but once you break out, you enter a new range and you don't come back to the previous range during a bull market. Of course, if you enter a bear market, you should expect a big flash of the open interest, but if we stay in a bull market, open interest goes together with the price action into price discovery. So that could mean that open interest after this, instead of seeing a flash, we continue even more bullish and it starts flicking somewhere in here. And most influencers are not covering that possibility. Everybody just repeats the same thing as if that is the only thing that can happen, which is a flash of all the open interest back into here. I repeat, that's possible, but it's not the only possibility. Whales continue to withdraw at record speeds. Now we are at 0.38. Every single day we drop lower. We have managed to break below 0.43, which was the accumulation in this range, and entering values of accumulation only seen before the 200% move to the upside. This is not a forecast. I'm just doing a comparison, and I'm thinking that we are in the same situation as before, increasing the chances that we could see an outcome similar to what we saw in this area. And the megaphone pattern has never looked so beautiful as we can see it in here. I encourage you to go to my videos in July and even before. We were drawing these lines and we have done some small amendments. I believe that this line was possibly here and was amended to there. Possibly this line was here and we amended to that, but we pretty much were expecting this nature of movement, and we have been chasing and following day by day these movements on the megaphone pattern. And at the moment we are 90% done, although this is the area of the highest risk. Of course, we are below this resistance, slightly above it, we could argue, but what I would like to see is a breakout in here, just like the yellow line is doing there, with a retest and then continuation. But I think we have done the most most difficult thing, which is not to break below the bull flag from 49 and going into 30s and completely collapse the cycle. Make sure that you watch my video on Coin Bureau Trading. This one called Price Explosion Charts are on fire. At least watch the last 10 minutes or so where I cover my outcomes on gold, on the dollar, on the global liquidity, and on the Fed. There are some good news. They are not incredibly, massively bullish good news, but there is some developments towards getting more liquidity, possibly helping with the breakout of Bitcoin. We talk as well that there is a chance that Bitcoin could front run that liquidity in the assumption that that liquidity is on the way and potentially seeing an all-time high, and then 2 weeks after we start updating this sort of charts and we could see the global liquidity putting a higher high. We were discussing about this point in here potentially becoming a higher low as well in that video. Go and watch it in detail. I think it's totally worth it not missing that point. I also have on the daily the liquidity, the ascending wedge adjusted in here. As you can see, I think I have made this line slightly a bit more like this, touching with this point, which means that at the moment we have the incentive somewhere in here. That is the red, that is the 70k, and at the same time we have the risk of losing support from the ascending wedge. The ascending wedge is quite a bearish structure, and breaking down threatens with a potential target of the base of the ascending wedge in some cases. In extreme cases, I could say. We don't have to do that. In fact, on the 4 hour last week, we saw a breakdown of the ascending wedge and we were ready and prepared for getting a disappointment in terms of shorting this, because we say this has been so bullish, so be prepared for this to become a bullish flag and just continue higher. And that can perfectly be as well the case here on the daily time frame, just because there is so much incentive there. So if the price was to dump in here, get to 65k, produce a bullish flag in there, and then still hit the 70k and disappoint all the shorts that could be expecting to take big profits towards the 57k, that is something that can definitely happen. And before I show you how much resistance we have at 70k, which is really unprecedented, this is the top 2 largest selling wall in the last 3 years. I'm gonna show you that in just a few seconds so you understand the risk at that point of 70k. The scalping chart is showing us still quite a lot of liquidity at the top. The shorts, with every move up, they come back and they place another short. That's the typical story whenever we are pushing higher. You can see in here we got to this high at 69 pretty much, and immediately they took a short there. Why? Because that's the previous all-time high from the previous cycle. They think that they can get away once again with shorting that all the way to 10k Bitcoin. That's crazy, but let them do that. You can see now we have a lot more liquidity at 69 that we do have at 67, and even going into 65, which is quite the most packed level on the downside and the close proximity. We need to make a 2.3k move, 2.4 to get into 65.8, which is where that liquidity is. Larger liquidity sitting at 64.7, so roughly that 65 has a lot more reward than just getting to 67, I will say, and that could give us that bull flag on the daily time frame. Going beyond, the liquidity drops substantially, at least when we are looking just at the 5-minute scalping chart, and we still have to go sub 60s to hit that red back, equivalent to what we just have less than 1k above the price. So that makes again the point for the shorts going too aggressive, risking a lot, and I think they are taking advantage of what they're seeing in the order book. Here I have Binance with a liquidity of 600 on spot selling wall at 70k, and luckily for me I have access to Fire Charts, which is amazing tool. You can get a discount in the description, and I'm seeing here the ask and the bid liquidity in the past 3 years. I'm not normalizing this to 99, I'm just leaving it at 100. Of course, if I reduce that, it's gonna make it more visible, but let me use the zoom and let's go to these levels in here and let's try to find all the ask liquidity. What is the largest one in the past 3 years? If we start with this one, we have 97 million in a single area of the chart. That is ridiculous amount of ask liquidity. Going back in this range, we don't see anything that goes beyond 80 million and 73 million. Now we are at 97, so we have to go back in time, and we're gonna find this level in here that was 134 billion, actually 0.134 billion, which is pretty much 130 million. That is 30% more of what we have in here, and that caused the price to go from 46 all the way to 39, and then it had a 200% up move. So could this resistance of almost 100 million have the same effect and possibly throw us back down 6k like it did in here, but then gaining so much momentum that then we push to the upside? Possibly. Think about this. We have done low, high, low, and high. We need to be prepared for a pullback. We cannot be just perma bulls and think that the price suddenly is going to become just a continuous of up and up and up and up. Yes, Bitcoin can enter into that, and the liquidity that we have above could potentially cause that, but there is also the chance that here that 100 million wins the battle but not the war. Going back into the bear market, we find 87 million, that is pretty big, and we have 70 million at the beginning of the bear market. So that 97 million is definitely quite scary, guys. This week, the Bitcoin dominance made it to 59%, right above it, and that is really crazy because this is a breakout above an ascending wedge. I have to admit that this is not placed quite correctly, so we're gonna adjust it slightly, but in order to touch that body there and this body in here, we have to admit that this is a breakout to the upside. We are looking at the moment for a potential top of the Bitcoin dominance. No one knows where it could top. It is widely accepted that 60% could be the top. Benjamin Cohen has made that extremely popular as a theory, but we need to be prepared for anything. In previous markets, we made it to 62%, right after to 63. We have seen 72s. Really, anything can happen. Don't take for granted that the path now is touch 60% and then immediately altcoin season. We will follow up with this to see something that makes sense depending on how events are evolving. Guys, my new partner is bluffing. This exchange is fabulous. You can open an account really, literally in 5 minutes, fund it and trade with leverage. I have managed to negotiate a 10,000 bonus for you guys and the lowest trading fees. The link is in the description. This doesn't require KYC. In fact, I already have 2 accounts to take different trades and to reduce risks as well. Video call, open the description down below, and if you already have an exchange, still have a look at the best products that you can find on crypto. These are my all-time favorite ones, and each individual one of them I have managed to get great bonuses and discounts. You have Lux Algo, High Block Capital, the one I was showing you before with fire charts, which is called Material Indicators, 15% discount. Trading View, which is a must. You get all the trading bot platforms that I have used throughout the years, along with my favorite one, the most advanced one, if you want, Ganium. I use extensively my Tangeb wallet. You just carry a card and it becomes extremely easy. They now even offer a ring, so you don't need to memorize any stupid seed phrases. Really works amazingly well. If you wonder about the liquidity pools, I get them from Trading Different, and you get 15% down below. Thanks so much for watching the video. I'll see you in the next one. Bye bye.